Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Wednesday, October 9th, 2013. We had a very sloppy day across the board here, where we made new lows and expanded the range to the downside in all the majors. We had more than 1% drops in everything across the board. We made a new low on the Dow, even after recording that 9 bars down, and more importantly, we broke down in the Nasdaq and broke below that little trading range that we've been kind of boxed up in. So today's price action gets an F. The advanced declines were decisively negative across the board. The VIX was higher again today, even after yesterday being elevated. So the market internals also get an F today. So today was just very, very poor price action. And some of the high beta names with some big leads in them, LinkedIn, Netflix, you pick it, they all got hit very, very hard today. So let's move on and take a look at the major futures and see what they have to tell us. Here we have the ES futures. The ES futures kind of followed through to the downside. We had that somewhat bearish candle yesterday where we closed below the day's open after trying to close the gap, but ultimately failed. Today we broke to the downside here. We closed below the 5/8 level, obviously making new lows on the move across the board here. Next important level of support is going to be about 1630 or so, which is the static trend line, and then below that there's even more support at 1625, which is the 4/8 level, and also the pivot low here from August. To the upside, the day's high is going to be in play if we start to return back to the upside. But it's very possible we could get a measuring day tomorrow, which is always possible after busting out of a range and expanding to the downside. So either one's very possible. But for now, certainly the momentum is down. We're below the 10 EMA, we're below the 50 DMA, and could potentially be closing in on that static trend line. On the Nasdaq side, Nasdaq was contained in this basic trading range here for about 2 weeks, and we certainly decisively broke below that today. You can see we dunked down here and used that 50 DMA as the level of support intraday today. That's going to be an important area tomorrow if we get a little bit of a measuring day going and don't continue. But if we do continue, next level is going to be 3125, which is that 4/8 level. To the upside, the day's high is going to be very important if that comes into play. Alright, so here's the Dow Industrials. Still continuing to the downside. We had a very negative candle yesterday. This was really the weakest sector yesterday, and today certainly was very, very weak as well. We went right down to the static trend line, which is key support here. If we break below the static trend line, the next level that's going to come in is the green line here. That's the 200 DMA, and that's 14,782. And if we interact with that, that's going to be a big area. And usually the 200 DMA, once you start to interact with that for the first time in a while, you're going to game that a little bit. So that's going to be very meaningful support. To the upside, if we move to the upside here, we're going to have key resistance at the day's high and the previous settlement at about 14,943 or so. So those are the levels to watch for tomorrow. Here's a look at the cumulative advanced declines. This time, for a little change up, we've toggled it over to the weekly time frame. Here's the New York Stock Exchange up here, still unable to get through the previous high. You can see this churning here, where the market internally is starting to roll over. It's not a big drop just yet, but we definitely have developed a downward bias. Down here on the New York side, we're minus 1,500 issues today. And you can see that even though we broke out above the highs from the summer, it didn't really follow through in a meaningful way, and now we're starting to roll back to the downside. Alright, so while we did have a pretty negative day to the downside, we didn't see that climactic rush for put protection from the option players. We're still well below the reversal threshold of about 1.25, so we could still see some more downside before we see a climactic reading in that put-call ratio. And here's a look at the other key market internal as far as overbought and oversold. Here's the 10-day trend ratio, Right now we're at 1.15, so we've got some more gas in the tank here before we get to that 1.35 oversold threshold. So we definitely could see some more downside before this classic reading shows some kind of an overbought condition. Not there yet, but could get there in the next couple of days. Now, as far as the individual sectors go, everything got hit today. Everything was down. Even the XAU was fairly weak today. There was a big break today in the biotechs. As we talked about, the high beta stuff was very, very weak. In the biotechs, a lot of these names have very, very big moves in them year to date, and they're certainly just kind of pulling their bids and actually, as of today, taking some money off the table and taking some profits. All right, so here are the sectors ranked from best to worst, and there really wasn't too much to show today. The utility index was up on the day. The biotechs were for sure the last lagger here and very, very weak. The internet index was also very weak, and that just goes to highlight how weak the high beta names were on the day. Airlines were weak, housing sector was weak, and the one thing was, with the XAU was kind of down towards the bottom of the list. There wasn't really a flight to quality there, so folks aren't really sure what to do with their money right now. They're really not bidding up treasuries. Utilities are definitely one of the better performers on a relative basis recently, and people are starting to take some money off the table in these high beta sectors. Here's a look at the utility index. You can see that we're 8 bars down now in this count. We're getting close to 9. If we finish 9, it's going to recycle this Comer countdown that's been kind of on deck. But you can see definitely there's been some pretty decent relative performance. Still short-term negative, being below the 10 EMA most importantly, and then also the 50. But definitely a little bit of a safe haven here, and one of the things that's not kind of declining. The BKX on the day was fairly weak, broke down here and settled down at 61.20. So this is definitely a breakdown. Key support's going to be at this 59.37 area now that we've lost this area. The XOI did close below the 50 DMA, and if we follow through below that, we're going to change this chart to intermediate term negative, even though we're already short term negative as well. Pharmaceutical index was also fairly weak. You can see this big breakdown here below this key area. There's going to be support right here at 4/8 at about 422, and then more important support from the static trend line just below that. But definitely a lot of notable breaks here in the market. We're finally starting to see some selling and just an evaporation of bids. The semiconductor index, the SOX, did break to the downside, but we're still within this 2-week range. So this is like one of the small bright points on the day, because the SOX didn't break down as much as Nasdaq did today. So this is definitely a small positive for the bulls, and this might be one of the things that they'll point to and say, okay, we're just in a little bit of a correction here, but until the SOX go really negative and lose that 50 period moving average, we're really not in trouble just yet. XAU made a new low close on the move. We closed right at the static trend line, which is going to be key support. There's more support at 0/8 at 87.50. So just watch the shorts on this one, because there's definitely support right, very nearby. And here's the BTK. This is a big loser on the day, down 4.5%. Yes, 4.5%. Just an absolute drubbing. You can see that we just collapsed once it lost the 50 DMA and closed at the 5/8 level. It's going to be very, very material support at this 2000 level, which is the 4/8 level on the Murray Math box. If we do rebound to the upside with this kind of a big candle, we're going to have really, really pretty good resistance here at the 50 DMA, and then of course at the previous day's close. So real negative price action here. Taking a look at the gold futures. Gold did almost nothing on the day. They tried it higher. We took a long in the lab. Really didn't go too much. Didn't really hurt you either, but just no flight to quality, and people are really just kind of in the process right now of raising cash with really nowhere to go with it at the moment. As far as the oil futures go, oil futures really didn't break too much either, which is actually kind of negative. since they're kind of pricing in some economic weakness, obviously from the stocks. But we're not really seeing that in the oil futures. Oil futures are still kind of glued to this 5/8 level right here on the chart. Key level here, we break out of this range that we've been in to the downside at about 101.5, or to the upside and clear 104.5. That would kind of resolve this area and probably give us a little better clarity for some real direction. But until it happens, we're still just range bound and need to respect that. All right, folks. Well, good luck tomorrow. As always, thanks for listening. This has been Rich for Tradesight.